one underappreciated asset class that you think will be really important to investors' portfolio returns in the future?
I think it's definitely alternatives. So when I talk about alternatives, it's really sort of, market neutral, global macro, managed futures, sort of multi-strategy funds that have not kept pace, and to be fair, they were never going to keep pace. They're not designed to keep pace in, roaring equity markets. And we've had mainly one-directional markets since then. So all of a sudden now we've got greater volatility. We've got greater uncertainty. We've seen through COVID that whole industry sectors are basically almost been closed. The environment for active management in general is much, much better than it was. And if we have, as I mentioned before, corrections as a result of inflation overshoots and bond yields spiking, equity markets correcting, that's really where your alternative managers are going to come to the fore.
I think something like infrastructure is probably, certainly institutionally and on the unlisted side, infrastructure's been in play for a long time. All the major super funds have been doing it. I think for retail investors, areas like property and infrastructure have suffered quite significantly. You think of airports and the like. But I do think that it's got some good long-term legs to it beyond, I guess, some of the dislocation caused by the pandemic.
An area that is underutilised, I think, in portfolios is your mid caps, because your mid caps tend to be there's a higher sort of EPS growth profile than say your large caps on average. And if we use the Australian equity market, the top 20 sort of banks and miners, whereas your mid caps, there's a lot of industrials who are actually growing as businesses, but it tends to be more liquid than the small cap end. So it has a better defensive profile. And and therefore, so you don't get that. With small caps, they're great for long-term investors, but sometimes you get these sort of big drawdowns in the market and the like. And so, and I also think that with the mid caps, once again to use the Australian example, is they're more diversified. So you don't have a big weight to banks and miners, and let's face it, that's got some macro risks. It may be unintended bets that you're taking on. So you get that sort of broader diversification.